Tuesday, December 17th, market analysis. Stan Ehrlich, good morning. 9:50 California time, just a little after the middle of the traditional trading day in California, 6:30 a.m. to 1 o'clock p.m. Now, I always start out with the indexes and the E-mini, go to futures, and some other things like the Santa Claus rally I failed to mention yesterday, but I'm going to mention it and go into greater detail before the end of the week, or maybe at the latest on Friday. I will be gone the week of Christmas next week, Monday through Friday, the whole week. Christmas is on Wednesday. Here we go. As you know, the index has got overbought. This is in the last week and a half. Pulled down a little bit a few days ago, bottomed out right at a little bit of support and rallied, but there was no new high in the E-mini, and therefore probably the S&P as well. And we'll see the other indexes in a moment. And now today we came down and challenged the lowest lows, got very close, about a point or two away from those other lows. At the moment, we are bouncing back to about 20 lower, and the S&P words are, that's 2 points, and around the middle of the range for the day. But I think we're going to make new lows today and break out to the downside below 6108. And if that happens, then we're going to see it drop off to the major bull trend line. And I think it's on its way down in the next couple of weeks to probably 59 and a quarter, a fairly sizable break. But that's it. I don't expect anything to turn into a long-term bear market. I expect it to bottom out around or just before Christmas, Santa Claus rally, and start to come back to new highs for the whole trend. I don't see any major top here. This is all minor downside correction stuff I'm talking about for 1 or 2 weeks and a modest to small price drop. 1 minute chart. E-mini. Opened yesterday afternoon. During the night came down, dropped off to a low this morning, had a good rally, and is now starting to slip a little. I don't see anything here that looks to me like it's going to rally more, although a little bit more wouldn't be bad. But I think it's going to make lower lows, and that is going to cause a whole mess of sell stops to be hit and a cascading number of technical indicators turning from either bullish to bearish or neutral to bearish. Next, Spider, same as the E-mini, came very close to recent last 5 days or so worth of lows. Didn't quite break it, but I still think it's going to break it. Now, the Spider has a little bit more to offer, and that was it gapped down this morning, opening below yesterday's lows, down here, rallied during the morning session, came up and almost to the tick, came up to the low of yesterday, closing the gap except for maybe a tick or two, but that's usually good enough, and started to come down. Minor bounce momentarily, doesn't really need to go up anymore, close the gap, or it might finish, the job by an extra couple of ticks, and moving up a little bit higher than the gap closure price is not unusual or totally unexpected. It just can't go up too much more. And certainly the fail-safe here is the high of yesterday. Getting above that would cause an outside up day, a bullish engulfing, and probably put this thing in a new high ground right away. So I'm thinking no more strength, no more new high for the day, a challenge at today's lows, and maybe breaking today's lows, which would be breaking the lows of the last few weeks and the last couple of weeks. Sell stops, fast, sharp break. And that's going to happen approximately at 5 points lower on the day. Right now it's down almost 2. Next, Doji, QQQ, overbought, prime target to slip back down. Not sure how it's going to handle the top of this previous wedge that it has closed above for the last couple days. Today's price range and yesterday's is 100% above the top of the wedge. Normally, this would be very bullish, but I don't like the fact that it got overbought. But that in itself is also not particularly unusual. Bullish breakouts of patterns frequently have pretty strong moves involved and get overbought in the process. But what doesn't happen is they don't drop too much. They usually drop back to the breakout point, which is now support instead of what used to be a little resistance, hold, turn around, and go back up. That would be, of course, give or take a couple little tiny points, 530, 531 pretty accurately. So if it drops below that on a close, we probably will get stuck inside the pennant again. And that means it'll drop down to maybe 516-ish just before Christmas and turn up. Next, QQQ, 1 minute, slipping. But again, doji, nothing here that I can comment about much. We've got overbought conditions on the NASDAQ NQ, up above the top of its wedge. Same story basically applies. Unfortunately, the QQQ did not make it higher than yesterday's high. Therefore, we cannot have a red bearish engulfing. And the NASDAQ did not make it above yesterday's high, like the QQQ, of course, its father or mother index, whatever, parent. So it will not have a bearish engulfing unless, of course, it manages to make a new high and then turn down. That is totally different story. Now, and we have some really great signals that are developing today. You'll wait and see. NQ, 1 minute, just going down a little sideways to down. The YM now has had 9 days in a row, 9, where the high is lower than the previous day's high, the low is lower than the previous day's low, and the closing price is lower than the previous day's close. 9 days in a row. That is unheard of. That's just like marching straight down 1, 2, 3, 4, 5, 6, 7, 8, today 9. But finally, yesterday and today we're oversold. And we're coming into a little support right here, right now, as we speak. So it's about ready to start to bounce. Now, this has been going down while the other indexes have been going up. So I'm not going to be particularly surprised if this starts going up while the other ones start going down. I don't know why this is happening, but it is. And being a technician, you trade the way the market moves, not necessarily your opinion. And that's what causes most traders, neophyte, beginning traders, to make big, big mistakes and, quit after a bit. They're losing too much money. You have to go with the flow. The market is always right and you're not. Opinions are opinions, but what the market does is a historical fact at that point. So you got to understand that you have to be very, very flexible. I think there's an old phrase, Chinese, you have to bend in the wind like a reed or you'll get broken off. In other words, flexibility. Next. I may have ruined that saying, but anyway, Confucius say. So YM, 1 minute, doesn't look like it's bottoming out to me. Looks like it's going to make new lows. Russell, down on the day a chunk, made a new low for the trend down. I think it's going to come down, as I've been saying, to 2309-ish, 2310. The trend line is not to be forgotten. It might stop the decline. We're getting close to oversold, but not quite yet. So a little bit more downside still, but we're most of the way there. Russell, 1 minute, not much to say. Bonds, have a bullish engulfing ER buy signal today. Well, back here when it was overbought and up against resistance, I said the market was going to have some sort of correction. I thought it might be down to the support area around 118, and maybe a little lower. I really didn't expect it to come down as far as it has. 1522, 115.22 looks like today's low. Exactly. And we're now higher on the day. We've now been higher than yesterday's high. We were oversold for 2 days. We're down right at the same approximate price levels that we bottomed out at before support. You might call this a 2.5 month double bottom. I don't care. This is the beginning of the rally, which is going to take this into the stratosphere. This is a double shoulder, head and shoulder bottom going back 2 years. First outside shoulder, first inside shoulder to the head of the formation. We got a buy signal on the very bottom. First inside shoulder, second outside shoulder, which is a double bottom in itself. The first outside shoulder on the left was a double bottom by itself. The symmetry is crazy. It's just looking very, very good. Now, that does not guarantee it's going to work, but it's just exactly what you would want to see if you expect this to be the low day, and we're going to start rallying now, and this is my opinion, all the way up to 150. Yep, that is my objective. It may take it a year. It may take it 6-9 months. It may take it a year and a half. But this is a giant formation that is starting to show a turnaround today, now, period. I can't get more profound. I can't get more adamant about this. 10-year notes, almost there. All it has to do is rally above yesterday's high, and we will have the same damn thing. We're oversold 3 days now. We got a lower low. We're currently higher than the previous close, but not yet higher than yesterday's high. But we're getting closer and closer. We could get a bullish engulfing like bonds have had. And by the way, if bonds close lower than yesterday's close, all bets are off because that kills the signal. All you have to do now is maintain the higher on the day for the bonds. But, the higher the better. New highs would be good. Closing strong would be good. And 10-year notes, I hope, is going to get pulled up here and also give us a green bullish engulfing. It's close, but no cigar yet. Crude, rocking a hard spot. Can't tell what's going to happen. Don't want to say too much. You break support, you're probably going to drop into this major support area and maybe keep going down. You break above 71.5, you probably would go up some, but there's a lot of resistance above the market. So in either case, not a very big move at first, but on the bearish side, it could turn into a lot more bearish. Natural heating oil, same commentary. You just happen to have a well-defined support level right at 2.12. Getting below that on a closing basis would almost make new lows in the first place. And you do have a downward slanting channel that you have not had any problem with. So I am looking for a move down to 1.98 and maybe down to the bottom of the channel at 1.93, and it goes down every day. So every day that it takes to get down there, it's a little bit lower for the bearish support line. Bearish because it trends lower, support because the market's trading above the line and coming down to the line to maybe exhibit support. Next, we have a potential head and shoulder bottom building in natural gas. Head and shoulders are my favorite pattern. They're symmetrical usually. They have a variety of parts to them. They have a great degree of predictability, including what's not supposed to happen as well as, of course, what is supposed to happen. I think we have a little bit more weakness to go, maybe down to 2.9-ish. That would be great. Approximately the end of the month, a couple of weeks more. That'd be about right, give or take maybe a week. And if that holds around 2.93 and starts to move its way up, especially with a bullish engulfing like we had at this bottom right there and the bottom of the market, we might have a head and shoulder bottom with all three important turning points containing an ER buy signal. So far, we got 2 out of 2. Keep your eyes on this one, natural gas. Neckline does slant upward slightly. Upside objective might be 4.8. Next, we might have a head and shoulder top in gold. It's made another new low since the bearish engulfing on December 12th. And the high on the RSI, I might add, was 74.17, almost overbought at 75. And if it had touched 75 or higher, my custom RSI, that I learned RSI from Wells Wilder himself and George Lane with stochastics and Larry Williams percent R, and on and on. I was part of the lecture circuit in the 70s, 80s, and 90s worldwide. Know all those guys. Well, nice people, great, great. Some of them good friends, or they were. Sometimes some of them are gone. George Lane now, and Wells Wilder also. Now, lowest low today since that bearish engulfing and almost overbought, and that woulda, coulda, shoulda been. I think it was the last shoulder on this little double shoulder. The first shoulder doesn't really have a double, but the body parts are there. And the head of the formation, we didn't get a signal on the high day, but it was overbought. The first shoulder, we were overbought, and we were not quite super close. Overbought on the last shoulder, which is not abnormal. You don't have on the last shoulder rally high on a head and shoulder top formation that big of a move up usually to actually reach an overbought condition because it starts from here and only goes up to there. Here, it's usually about the same rally or more, but you're already heading up a lot. And here, it's the most likely to get overbought because it's the first shoulder, the end of a very strong upswing. Okay, possible head and shoulder in gold. Keep your eye on this. We do have a sell signal in silver, and it was on the high day exactly, 1212. And we are approaching the lowest low for the formation, and therefore approaching the slightly downward slanted neckline, which says silver is supposed to go down to 24.5. Big bear move if this works correctly. So far, what the hell? We got another lower low. We're around unchanged, down just a hair. It deserves a little bit of rest on the way down and a little bit of a bounce here and there. But this is heading exactly in the right direction since I started screaming bloody murder on 12/12 last week. Okay, platinum. We got the top of the market to the exact day with another sell signal come on October 30th. And it's just made yesterday the lowest low since then. And I really don't like this that much, but I have to say, barely the body parts are there. The last shoulder is very feeble, not much of a move up, not as high as you would expect somewhere up here because the first shoulder is about there. But there is a down slant to the whole thing, so maybe not up here, maybe down there, but this is still even lower than that. But you've got the top, perfect. You got a rally in that time frame, then a time to the top, and about the same amount of time from the top to this last feeble shoulder. Hey, I think it's a head and shoulder top, but not a very good example of it at all. Downside objective is going to be 788. Let's see what happens. And copper. We got a sell signal on copper on 12/12. This is the lowest day since then, a new low. We are still short. Our trailing stop is still coming down. And this has been lowered, the stop, while the market's going down. It looks like the high of the day hit the stop, but that was earlier today when the stop was at higher levels. We move our stop maybe minute by minute if need be, certainly often hour by hour, and very commonly day by day. So it really depends upon how far down or how far up and how quickly, not how long it takes, but how, if it takes going sideways a week, we go sideways with our stop for a week. But if it moves down in 5 minutes a lot, our stop moves down a lot in 5 minutes. Okay, this is working great. What can I say? Next, watch out, watch out, watch out. The soybean market is barely holding on to support after breaking it decisively. Only a strong close above where we are is going to encourage me to stay friendly to any degree whatsoever. I think we're about to go down from where we are, hit the low of the day, maybe make new lows. The bigger, the faster, the larger drop we have today on the close relative to the support line, the more likely it's considered to be a significant downside breakout. And watch out, we don't have very far to go to make a new low for a long, long time frame. This is soybeans. It's over 3 years. I don't know how many years. Multiple years. New lows coming up. Very base, very bearish. And I might add that in the months to come, the next couple of months, although it may drop a lot, I think that could be the last big hurrah, so to speak, on the downside for this long-term bear market. But let's talk about that if it happens. Soybean oil breaking the support levels right now, ticking away right at support almost. Same thing for beans, basically. If it does not turn around, and it just got oversold today, RSI hit a level of 24.57 below 25. So if it turns around, it's a bullish story, but it's got to be the low, and it's got to start to go up, and it's got to start to close above 43.5 at least. Then I'll claim last shoulder low. But I'm sorry, the grain markets just have too much sickness going around. I think this is going to keep going down, make new lows, make lows lower than May of 2 years ago, a year and a half ago, and that price would be under 35. Yeah, that's about it, give or take a couple ticks. So bearish. I see it collapsing, so to speak. Uh-oh, meal is doing the same thing. Soybean meal has challenged and made today a new low, going back all the way to, what was that? June of 23, 2 years plus back. Yep. Last vestige of support. Looks to me like it's about to collapse. It did go sideways for a month, so that, builds up reserve energy, going up or down either way. This looks like it's going to be heading Tierra del Fuego south. Now, corn broke out last week of its head and shoulder bottom, but it failed right away. That's not good. The upside objective of 494-ish is now defunct. It dropped below, closed below, stayed below 1, 2, 3, 4 days now its previous neckline. This is just plain old not supposed to happen. You're supposed to come back to the neckline or close to it after the initial upside breakout, and then turn around and make new highs. You're not supposed to close or get below, in fact, at all, in fact, the neckline. That's supposed to be a pretty good support level. Now, I've seen it do this, and I've seen the head and shoulder bottom work, but they're not common. So are we going to continue to break down? Everything else is said about the other grains is not particularly constructive, bullish. So I think this is going to continue to work lower. And what about wheat? Oh, no, it's also the same. New lows for a week or two, almost making new lows for years. Super close. You realize it topped out the beginning of the war, and we had a bearish engulfing ER sell signal exactly on the high day, I think it was March 8th of 22. And that short signal was in the very wide ballpark of 1500. I think we probably went short. I can see it right there. 1485-ish. Obviously, we don't have that short, but that was our first one. And we're at 544. It's about to have another sharp, big leg down. Cattle. Yesterday, bearish engulfing ER sell signal. New low today, lower than yesterday's low. We're short. We're making a little money. Not a lot yet. I hope. Our stop is still at the same level, hasn't come down at all. I probably should change our stop kicker, meaning the speed at which that moves, to faster, so it's going to drop it down so the risk is not that large. I might do that today or tomorrow, and if I do, I'll tell you. Miss Figgy, bearish engulfing yesterday, challenging support. Again, challenging support right now, same as yesterday's low, but it's stuck right there, right now, not going back up. I think it's about to break support and come down to 77-ish. The only stock I'm following is SQ. Little bit of a reversal yesterday, nothing interesting. A little bit of a follow through to the upside today, nothing particularly great. What is important is that this is a 2-year major long-term bottom on SQ. Big range, all the way from approximately the low 90s to mostly the low 50s. Finally, an upside breakout, overbought, correction to support. New highs, a little overbought again, correction to a higher low than a couple weeks ago, and starting to work its way up. Classic textbook bullish type of price action. Where's the E-mini? Down 2. Well, 22. Slipping a little, not too much. You guys have a great day and profitable trading to you. Oh, wait. Santa Claus rally. We are buying about 10 minutes after the opening on Tuesday of next week. That's a week from today. On Monday of next week, 2 business days before Christmas, which is on Wednesday, and Friday of this week, about 10 minutes after the opening. I'll get more accurate timing wise with my details. And the old adage is to let go of it about 11 o'clock a.m. California time. I'll get more accurate for the time period before the week is over and before the beginning of January. But you liquidate your 3 positions. You have 3 entries and 3 exits. The 3 exits are the first business day after the year begins, 2nd of January, I think it is. Let me double check that on my calendar for you. And that would be New Year's Day, Wednesday, holiday, 2nd of January, Thursday, Friday, the 3rd of January, and Monday, the 6th of January are the 3 days to let go of the 3 different positions. Doesn't matter what order, at around 11 o'clock. So there you go. Now, have a great day and profitable trading to you.